JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 26th of April 2021. So yep, welcome everyone. Guys, welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff, guys. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then guys, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, and as you can see, the index did push a little bit higher today. It made its way to the north. Of course, this might be the consequence of the late kind of recovery we had on Friday in the U.S. markets, and yep, that's maybe the little result here we're getting a little slight push higher. Nevertheless, we are still trading below the 21-day EMA. However, at the moment, although maybe this could be seen as a bit of a bearish indication, let's not forget that, for example, from around the end of February, the index kept on oscillating around this 21-day EMA, so that's why we're not really going to focus too much on the whole fact that it's currently below the 21-day EMA. Instead, I'm going to keep an eye on some of the levels. And for now, if you remember, last week I've mentioned that this 29,519 territory could be seen as a good potential area of resistance. Previously, it did take the role of support. Now it could be seen as resistance. So, long story short, basically, in a way, for now, I'm gonna lean a little bit more towards the upside. However, I'm gonna be very careful near this whole area, near the 21-day EMA and this 29,519 territory. If we get a break above this barrier, then yes, of course, slightly higher levels could be met. But as you can see, I have this arrow drawn here from this level and all the way kind of here to the upside towards the highest point of February. But of course, another thing to kind of keep in mind is to be careful near this downside line taken from the high of the 16th of February. So in a way, this line might initially provide maybe a temporary hold up. However, if the buying is still strong, then yes, further acceleration to the upside could be possible. But in the and then basically, yep, we could aim kind of for higher levels if this 29,519 territory gets broken. For now, I'm just targeting this little area because I want to be very careful and want to see if we can overcome this. If not, if instead we start dropping back below the 28,980 territory, somewhere around here, yes, we could go for a corrective move lower here again. However, I will, for the downside, to get a little bit more comfortable with the downside, I would prefer to wait for a break of this upside support line here, taken from the low of the 19th of March, guys, of last year, of course, and then, yep, we'll take it from there. Now, I can see in the chat room, there's a question about EURUSD. As you can see, I mean, I have it here on the list, so I'll get to it in a moment. But yeah, guys, let me just go through these first, and then yes, we can jump into EURUSD. Now jumping into the German index, DAX here, and yeah, the index did kind of let's say push back to the upside on Friday. However, it wasn't enough to kind of bring it back into positive territory, but it still is showing good. It did still show good signs, and the fact that we managed to rebound from this upside line, of course, taken from the low the 26th of February, also kind of gives us a bit of hope that the upside could continue. If we take a look at the cash index right now, and we'll see where the price is currently sitting at, you'll see that the price is currently sitting at around 15,280 territory. So basically around the same level where it closed. And what I need here to see is a good push above the 15,312 territory right here in order to go for some higher levels. At the moment, I'm just going to be very careful, very cautious, and yep, I'm going to keep an eye on this barrier, the 15,312. If we get a nice pop above it, then yes, I'll aim for some higher levels. In terms of the downside, so we need to see a break of this upside line. Of course, that's the main thing at first, but just to be a little bit more maybe on the safe side, I would prefer to wait for a drop below the 15,072 territory right here, marked by the last week's low here. And at the same time, if we get a drop below this, then we could also get a drop below the 21-day EMA, and maybe all this could add up a little bit more towards the negativity, and more sellers could join in. The DXY, dollar index, so continue to drift lower, and yep, everything's kind of working according to the plan. Last week I've mentioned to you that in a way I'm keeping an eye on this downside line taken from the high of the 31st of March, and I need to see a clear break, and I need to see the daily candle staying above this downside line in order to, let's say, start considering higher levels. But of course, at the moment we cannot really, let's say, even examine higher levels, because, well, at the moment it's the downside line here which is kind of dictating the rules in a way, and then should I say the bears are dictating the rules. But if you remember last week, I said that even if we get a reversal here again to the downside from this downside line, be very careful, because my next target is the 90.63 territory line taken from the low of the 6th of January. So guys, I mean, long story short, yes, we could go for further declines, but we'll be very careful near this upside line, and then because we might see a nice rebound here and then maybe even a break of this downside line. But again, I'll pick up on this later on, but at the moment I'm leaning a little bit more towards the downside. Now gold. Gold is at an interesting spot here. So first of all, we are still trading above this upside line taken from the low the 31st of March. So in a way, there is still a chance to drift higher. We are kind of we violated this downside line, this tentative downside resistance line. Or actually, let me just adjust this. I think this is, we're not capturing here a high, so let me just grab this. There we go. And yes, so okay, so this looks a little bit much a little bit much better, a little bit better. Now here, basically, you can see that, yes, we are still above this downside line that we managed to break. We are above this upside support line, yep, taken from the low of the 31st of March. However, we're trading currently below the 100-day EMA and the 200-day EMA. This area did provide a bit of resistance here. Now, in order to go for some higher levels, well, I mean, if you want to be a little bit more on the safe side, you could wait for a push up of the 1797 territory or 1798 territory here, and then aim for higher levels. But yeah, at the moment, I mean, if you're a little bit more risky, then of course you could keep an eye on this upside line. If it continues to provide support, then yes, guys, we could go to the upside. But just like I said, the slightly safer probably bet here could be on a break of the 1798 territory, because this way the commodity would confirm a forthcoming higher high, would already be placed above all of its EMAs here, and potentially more buyers could join in. But again, as I've mentioned to you as well last week and before, that yes, we could go for some higher levels, but still this move higher could be classed as a temporary correction, because as you can see, we're trading below a downside resistance line taken from the high of the 7th of August here, the one that kind of also captures the highest point of January here. So basically this move here could be seen as a temporary correction, but again, we'll get to that point. First, let's go slowly, let's go short with small steps. In order to aim for some higher levels, yes, I need that push above the 1798 territory. For the downside, pretty straightforward. Move back below this downside line, the one that I talked about earlier, and the drop below the 1760 territory might just do the trick for more sellers. And we could go for that also kind of corrective move lower, because again, it's a bit of a mess here with the lines. I do understand that, but I'm keeping those for now, because we have a lot of things happening here, as you can see. So yeah, for now, I'll just, like I said, that's why I'm looking at this one from the very, very short-term perspective. So yeah, let's see how that's going to play out. But again, as I said, for the downside, I need to see a drop below the 1760 territory. WTI oil, quick update on this one, and here. Last week I talked about this one, and as you can see, we had a bit of a recovery on Thursday and Friday here. However, now the commodity is drifting back below the 62 territory. Yes, it's currently resting on the 21-day EMA, so kind of this way giving hope for maybe for the bulls a little bit. However, looking at this little pattern here, this formation of these 4 candles here, it looks like a bit of a bearish indication, guys. But nevertheless, if you want to be a little bit more on the safe side, probably a drop below the 60.64 territory right here might just do the trick for more sellers, because this way the commodity would confirm a forthcoming lower low, and yep, we could go for the downside a little bit lower here, of course. For the upside, I need to see a daily candle staying above the 63.80 territory right here in order to get a little bit more excited with the upside. Yeah. Now, Ethereum. Ethereum is pushing north. To be honest, this one's probably the best performer, I would say, right now. And yep, we are approaching this 2550 territory. I spoke about this last week, because basically what I said to you last week was that if we get a pop higher and we overcome the 2550 territory, but we fail to stay above it, then, well, maybe it's not all good here in the bull block. Now, it seems like we're having another attempt to kind of test the 2550 territory. Can we break it and stay above it? Well, we'll just have to wait and see, guys. But at the moment, I'm keeping a close eye on this area. If we clear that, then of course it opens the door towards the next. Let me just recycle one of these lines here. Of course, it opens the door towards the current all-time high near the 2,644. And then, yes, of course, after that, I mean, if it continues to rally, then, yeah, well, the sky's the limit for this one. But at the moment, at this point in time, guys, let's be very careful. And yeah, I'm keeping a close eye on this 2550 territory. If we manage to clear that and stay above it, then, well, higher levels could be met. AUD/JPY, here, let me just start off probably a little bit differently. Now, last week I talked about this upside support line taken from the low of the, taken from the low of the 19th of March here of last year. So last week we got a break, slight break here below this upside line, and then kind of also hanged around a little bit here. And now we're seeing a bit of a reversal here. Of course, understandable, because the equity markets are kind of reversing to the upside so far, again, at the moment. And yep, that's the result we're having here on AUD/JPY. In terms of this upside line. Now, previously, as I said, well, not well, I kind of looked at it. I mean, it still is kind of valid, but what I wanted to show you instead, probably I will get rid of it because I want to draw something else here. Because when we got that little violation of this upside line, it didn't really move lower, but that's why I told you to keep an eye on this 83 territory right here, because that's what provided good support here. Instead, what I want to do here is draw this this little kind of other formation, other pattern, which could potentially work out. Let me just quickly up. There we go. So something of a triangle pattern here that we have ourselves, and yeah, I mean, if this kind of continues to work, then yes, it will be quite interesting. Basically, then the pair will be seen coiling up, and we could maybe see a nice, beautiful, maybe explosion here. Now, of course, I'm leaning a little bit more towards the upside here, because if we take this as a nice little triangle pattern here, the potential here to break out higher is slightly bigger than the downside, because basically the prevailing trend of this triangle, the prevailing trend before kind of getting into this triangle was to the upside. So in a way, there is a chance for this one to continue moving north. However, guys, probably the safer option is to wait and kind of wait for a violation of this triangle, and then kind of examine either the upside or the downside, and then yep, we can take it from there. USD JPY, this one continues to drift lower, and look at this little kind of madness here. Now, last week I told you to keep an eye on this hurdle here, this 107.55 territory right here, and yep, exactly, this you can see exactly why. So what I said to you that even if you get a break of this upside line, still, I mean, we would need to see a drop below this hurdle, below this 107.55, and then yes, maybe lower levels could be met, but we would prefer to see the daily candle staying below this area, but we didn't really get that. You can see that yes, we had a little drop here, but we didn't really get the daily candle staying below this area. Now, instead, we continue to see the pair kind of balancing around here, and probably one thing for sure right now is we need to get rid of this upside line, no longer valid, because that was violated and didn't really move for anywhere further. For now, that's what I'm keeping an eye on here, and if I want to go for lower levels, well, I would prefer to see that drop below the 107.55 territory. For the upside, I need to see first of all a break of this downside line, taken from the high of the 5th of April here, and then a push above, somewhere above this 108.34 territory right here. Previously it did act as a good area of support. Now it could be seen as a good resistance. Quick update on Gbp Chf. Now this one is interesting, and yeah, so previously last week when I covered this one, I said to you that this is the idea that I'm keeping an eye on. So well, actually I didn't look at it last week, the week before that. So what I said to you that we might see a bit of a recovery here, maybe towards this 1.2790 zone. If it holds, then yes, another slide could be possible, and this is exactly what we're seeing right now. Now, given the situation here right now, I would probably readjust this a little bit, and not probably, but I will readjust this a little bit. Now, previously I looked at this 1.2643 territory right here, but now I'm going to grab the this is, I believe, this, let me just quickly double check this. So 1.2627 and 1.2625. So this is the lowest point of April, the current lowest point of April. So in order to go for the downside, we need to see a violation, a break below that lowest point of April. And that area is roughly around the 1.2626 zone, so approximately around there. And then yes, we could go for some lower levels. Initially, although I have the arrow all the way towards here, but initially my main target would be somewhere around this 1.2530 zone right here. And just to let you know what that level was here in the past, as you can see, it did act as a fantastic area of support previously. So we might get a hold up somewhere around here, also near this 100-day EMA shown as the green line. And but if it still doesn't hold, then yes, further declines could be possible. For the upside, what I would need to see here, at least to push above the 1.2790 territory, a daily candle staying above it, in order to get a little bit more excited. Oh, let me just grab this arrow. A little bit more excited, in order to get a little bit more excited with the upside. Now, Euro against the Turkish lira, something that you probably don't look at very often, but last week I spoke about this pair, and well, I mean, we are seeing a bit of a crisis in, a currency crisis in Turkey. The lira continues to devalue against its major counterparts, and well, no exception from the euro here. So as you can see, last week I told you that if we get a clear break above this barrier right here, the 10.02 territory, my next target is the 10.20 level right here, which is not only the highest point of November of 2020, but also the all-time high, guys. So there we go. That's the monthly chart, and as you can see, it's just parabolic. It just, of course, some of you probably are looking for a maybe potential short here at some point. Yes, it could be the case. We could see something like that as an option. However, not at the moment. Seems like that at the moment is just one-way traffic, guys, and well, we didn't really get that reversal signal yet, so I would be very careful with those shorts. But because at the moment, basically, we are creating a new all-time high, and well, it would be a little bit difficult to predict where it could travel further. Of course, we could try to draw maybe a Fibonacci extension, and for that, probably let me just quickly jump into a monthly chart again. So let's have a look at this. So just bear with me one moment. Where's my Fibonacci extension? There we go. So okay, so if we draw it from the low here of the lowest point of November of 2018, grab the peak here of the highest point of November 2020, and then grab the low of roughly around here somewhere, basically the low of there we go, the lowest point of this year, and that's the one that we have. And probably I'll just gonna drag it this way so that we could see the areas better. So, and the thing that we get here right now is that's what we're, as you can see here. So basically the 50% retracement on the Fibonacci extension is around 10.53, guys. 54 even, I would say, if we want to round it up here a little bit. And then, yes, it could continue traveling higher. The 61.8% retracement is around 11.05, and so on, of course. But again, the first one, you could mark it as a potential target, this 10.54, approximately around there, maybe 10.50. It might not even travel all the way here. And then, yep, we could take it from there. But at the moment, I would say that as long as it stays above the let me just adjust this very quickly. As long as it stays above the previous all-time high near the 10.20, yes, this could continue traveling higher. And finally, EURUSD. With this one, it's a tricky one because we have managed to reach the target, and I kept on